All right, let's dive into a trading system that's all about finding clarity in the chaos. It's called the full banana strategy. And today, we're going to break down its core rules, the psychology that makes it tick, and how it really promises a clear, repeatable path through all that market noise. So let's kick things off with a question I'm pretty sure every single trader has asked themselves at some point. Are my charts lying to me? You know the feeling, right? You spot what looks like the perfect setup, you jump in, and then bam, just moments later, the market completely reverses and stops you out. It's an incredibly frustrating experience, and it can make you doubt everything you're doing.
Well, that frustration, it actually has a name: algorithmic noise. Think of it as the chaos, all those misleading signals, especially on the short-term charts. The quick spikes and the fake outs that seem almost perfectly designed to trap emotional traders. The full banana strategy was literally built as a direct countermeasure to see through all that noise.
So where does most of this noise actually live? Well, this system argues that it's most common on the one chart that so many day traders swear by, the 5-minute chart. In fact, the whole premise of the strategy is that this very popular time frame is often a source of total deception. Now, the solution here isn't some complicated new indicator or anything like that. It's actually just a simple shift in perspective. The thinking goes like this. A lot of trading algorithms are specifically programmed to exploit patterns on the 5-minute chart precisely because it's so popular. So by just switching over to a 3-minute chart, you're basically stepping just outside of that algorithmic crossfire. You're finding a clearer signal by looking where fewer bots are designed to create all that fake noise. And that brings us to the heart of the full banana solution. It's not just about one chart. It's a whole process. It relies on looking at multiple timeframes and sticking to a really strict set of rules, all designed to confirm a trade is good before you ever risk a single penny. Okay, so the strategy is built on what it calls 3 windows. If you look on the left, window 1, that's your main signal, the one you spot on the 3-minute chart. But here's the key. A trade is only considered a go if it's confirmed by what's happening in those 15-minute charts on the right, windows 2 and 3. It's all about making sure you're seeing the same story being told across different time frames. Now, this brings us to what is, without a doubt, the single most important rule in this entire system, the closing basis rule. The idea is so simple, but it's incredibly powerful. Wicks are noise. The closing price is the truth. A wick just shows you some temporary emotional volatility, but the close of the candle body, that shows you where the real battle between buyers and sellers actually settled. For any setup to be valid, the candle body has to close inside the range, period. So let's boil it all down. It really comes down to these 3 pillars of confirmation. First, the pattern has to show up across those different windows we just talked about. Second, and this is a big one, high volume must be there. Without the big institutions playing along, it's probably a trap. And third, it has to obey that closing basis rule. The candle body must close inside that valid range. If even one of these is missing, you don't trade. You just walk away.
Look, theory is great, but let's actually see how this all comes together in the real world. We're going to break down a real trade, what the system calls an A-plus setup, to see the proof right in action. And here it is. This is the dashboard signal that kicked the whole thing off. The stock, Antelopus, just lit up every single critical scan all at once. It had a 3-minute setup, a 15-minute setup, and it was trading on massive volume. This triple confirmation is the holy grail. It's incredibly rare, and it signals the highest probability trade in the whole system. This is the A-plus setup you patiently wait all day for. So what made this signal so special? Well, the entry wasn't just breaking some minor level. It was punching through a major resistance zone where both the weekly high and the previous day's high were stacked right on top of each other. Think about that. It's like breaking through 2 walls at the exact same time. It just releases a tremendous amount of pent-up energy. Now, during this trade, a candle formed with this terrifyingly long upper wick. I mean, it looked like a massive rejection. Most traders would have panicked, hit the sell button, and gotten out. But traders following the system, they ignored that scary-looking wick and just checked the closing price. And guess what? It closed inside the valid range, which meant the trade was still on. This is where rules have to beat your emotions every single time. But hey, a great entry is only half the battle, right? Now let's talk about how the system handles managing the trade, specifically how it adapts its profit targets based on the strength of the setup itself. This is not about just grabbing a quick fixed 1% gain and calling it a day. This is what's called the target hierarchy. So on a normal everyday breakout, a simple 1% profit target might be perfectly fine. But when your entry is breaking a major historic level, like a previous day's high, your target gets an upgrade. You stop aiming for just 1% and instead you set your sights on the next major resistance level up, which in this case was the monthly high. And what happens when it breaks even that level? Well, it enters what's called open territory. This is that beautiful blue sky zone where there's no recent resistance overhead at all. When this happens, you throw all fixed targets out the window. The strategy immediately switches to a trailing stop, which lets you ride that momentum wave for as long as it lasts. You don't decide when to exit, you let the market tell you. Just take a look at this example from Manorama Industries. You've got two traders who get the exact same entry signal. Trader A sticks to a fixed 1% rule and gets out. It's a good trade, no doubt. But Trader B sees that the stock has entered that open territory and switches to a trailing stop. By simply adapting, Trader B captures double the profit. Same entry, totally different outcome. All because of adaptive trade management. A great system is one thing, but honestly, none of it works without the most critical piece of the puzzle. So let's talk about the foundation that holds all of this together. The discipline to actually follow the rules, especially when it feels really, really hard. You know, in trading, knowing when not to trade is often way more important than knowing when to jump in. And this system gives you a super clear checklist of red flags. No volume confirmation, you'll walk away. The candle body closes outside the range, you'll walk away. It's not a top market leader or the setup just looks choppy and weak, you walk away. No questions asked. The goal here is to protect your capital for those true A-plus setups. Because in the end, the full banana strategy, just like any system, is really just a tool. Its real power comes down to a challenging question you have to ask yourself on every single trade. Are you trading the objective, rule-based setup that's right there in front of you, or are you just trading your own feelings of fear and greed? The answer to that question, well, that's everything.